the Uganda bond market weekly alert. So we're looking at the week of 28th of July to 31st of July 2026. So this week the market did something really interesting. It split into two. We have 8 bonds that are sitting at their cheapest price of the week, and then we have and I'm calling this the buy signals, and then we have 12 bonds that moved up in price, so they're at their week's highest price, and these are at their most expensive price, and I'm calling it the avoid signals. But let's say, just be cautious. I think I'm going to rename this and start calling it the cautious signals. Just be cautious when like at the price that you're bidding for these bonds. So the yield range across all the 24 bonds this week is 10.14% at the short end, all the way up to 15.93% at the long end. So let me show you these two groups. We have the buy signals, and just like I've told you, these are bonds that fell in price over the week. And remember, falling in price means better yield for you. So among these, we have the 16% bond, which is maturing July 2050. We have the 16.25 bond maturing November 2035. And well, all the way as I'm showing them to you on the screen, and then green, and I've showed you their yield to maturity. So these their prices fell, meaning their yields got higher or became better. And then I'm showing you the void signals as well. These are bonds whose prices rose from the start of the week to the end of the week. These are mostly long tenor bonds. So we have the 15% bond maturing June 2043. We have the 18.5% bond maturing August 2042. This has a really good coupon rate. And then we have our 17.75 bond. This is a really good bond. Like, it's so rare to find, but unfortunately, it's remember, people like it so much. So demand is high, its price rose, meaning its yield fell. So I'm calling those the cautious signals. Avoid that term, avoid. I think I'm going to change it going forward. But what does this actually mean in shillings? Let's take the 16% bond maturing July 2050. This was our best buy signal for the week with just 10% withholding tax. So 1 million face value, your purchase cost would be about 1,04,300 there shillings, because its price is slightly above the face value. So your gross coupon every 6 months is about 80,000 shillings. After removing your 10% withholding tax, your net coupon per period is 72,000 shillings. This gives you 144,000 shillings net per year. To earn the equivalent of 500,000 shillings per month from